What's good, YouTube? So, look, this is a simple breakdown on Forex. If you trying to learn Forex or you just getting into Forex, you could get basically a simple breakdown, not gonna be too long, stuff like that. It's really simple. What you're looking at is the market, of course. These candlesticks, you got the bearish candlesticks and the bullish candlesticks. The bearish candlesticks is the blue candlesticks. Well, blue candles. The blue ones basically means up. The bearish, which is the red candles, means going down. Each candle is represented by these time frames. So for every single candle that you see, that'll be like 15 minutes, 15 minutes, 15 minutes, because we're on the 15-minute time frames. It's different time frames, which every single time frame is basically just one candle. Whatever time frame you're on, one candle is that, the time frame. So basically, what's going on is the market is going up or down. What you're doing is trying to get in at a position to where the market is going in your way. That's really how you make money. Simple, easy. The market going your way, boom, you're making money. But if it's going the opposite way, you losing money. Of course, basically like the stock market. If you understand the stock market, I'm pretty sure it'd be easy to understand this. But yeah, it's just going up and down. And then when on these candles, on the candles, you got the candle, the wicks, which is what you see when the body of the candle is being pulled back. The wick, let me see. All this right here is considered a wick. So yeah, I advise y'all to take some time and learn candlesticks, learn candlestick patterns. Because once you learn it, I promise you this game, easy. This easy. So then what we got here is called lots. So with the lots, it's like each one is considered a certain amount of money. So when you think lots, there's one, we could say 1 cent is equal to 10 cent each time the market move a pip. And a pip is these numbers on the side that you see. These numbers all on the side, those are considered pips. Well, those are like how pips work. It's like you take your entry point and take wherever you're gonna put your take profit or stop loss, and you just basically subtract that, subtract those two numbers, and then the number that you get, that's how many pips that's worth. And on some apps and stuff like that, it got like a pip counter to where like you could play something and then stretch it and it'll show you the pips. But yeah, that's simple breakdown on pips. That's really how they work. So now back to lot size. Lot size works on your pips. So when you got this 1 cent, that's basically 10 cent, like that's moving. Each pip equals 10 cent. So this this would be worth 10 cent. This would be worth 20 cent. Now if you add that, you just move in a decimal. So now this would be worth, this isn't worth 50 cents. This should be worth, what is this, $5? Yeah, this should be $5. So then if you had this would be considered $10. This would be moving like $10. So this would be, that's 10 cent. That's $1. That's $10. Simple, simple. So when you switching the numbers, you just basically adding a zero. That's 10 cent. Now we add a zero. That's $1. Now we add a zero. That's $10. Moving the decimal. So then you also got your take profit, take profit stop losses. That's where you would get in on a trade and then it's going your way. Then you're like, oh, okay, I'm gonna get out. Say right here, boom. That'd be my take profit. And say the market don't go your way, you don't want to lose all your money, blow your account. So you set stop losses, take profit stop losses. Okay, the market might go up this far, and if it go up this far, for me doing my math on how many pips that'll be worth and what my lot size gonna be, I can see, okay, say this right here, I lose $3. Okay, I'm gonna set my stop loss right here. So once I lose that $3, it ain't going no further than that. That's what I'm comfortable with, losing $3. And yeah, that's really simple breakdown. This my trades I've been holding. You feel me? You feel me? Just a little some. Been holding these for the past few days. And for beginners, bro, some that I would advise when you trading. When you trading on these different time frames. What I would advise you to do is trade on these higher time frames. It's your choice. Trade whatever you want to trade. But my opinion would be trade these higher time frames. Personally, I like the 4 hour, but from like the 4 hour, 1 hour, even the daily, that's really how you get those. You can hold, you ain't gotta constantly check the markets, and you could just let it flow, let it do what it's gonna do. You ain't really gotta worry about it, because if you trade on a daily, you place a trade, you really don't gotta look at the market really until tomorrow. Until the next day, you ain't gotta look at the trade. Why? Because you're on a daily time frame. So like I said, each candle is worth whatever time period you're on. You place a trade, come back, see what it did, or you probably be up some money, or you probably be in retracement, or who knows, but you ain't got to be worried about it. You just get in, let it do its thing, and get out. And that's really it. A simple breakdown. You got the market, freaking the candles, got your lot sizes. That's really it. Then all you would need, you feel me? Watch videos on candlesticks, so you can learn how candlesticks work. You can learn different patterns. You can learn different things on candlesticks. Yeah, that's basically it.